National Treasury is pushing back against criticism about its decision to tap into the Gold and Foreign Exchange Contingency Reserves, or GFECTRA. This after Finance Minister Enoch Godongwana announced that government intended to draw down 150 billion rand from the reserves to reduce debt service costs. Debt service costs absorb more than 20% of the budget. GFECTRA has a balance of more than 500 billion rand. National Treasury says to prevent risks, the gold exchange reserves will have a buffer of 250 billion rand, while the sub-contingency reserves will have a buffer of 100 billion.
We will not dig into the country's reserve in order to realize funds for use by government. So for us, the two main principles is to ensure that we honor our obligations should this account ever be in a deficit. And this legislation allows us to do that. And secondly, that we leave sufficient funds in the buffer, the contingency buffer, to ensure that should there be any negative in the GFECTRA, the second line of defense for the sub is the contingency reserve account, which will then provide that protection against any currency volatility.
According to National Treasury, tapping into the reserves will reduce debt service costs, which stands at 356 billion rand.
Of course, these funds, we've proposed that once they reach the National Revenue Fund, they are used to reduce the government borrowing. Therefore, 150 billion will be used, and as a result, we expect that this will reduce debt servicing costs by about 30 billion over the medium term. And this will be accompanied by a reduction in the stock of debt.
The downside is that the drawdown will cost 30 billion rand in the medium term.
Regarding the cost, the Reserve Bank will basically fund the disbursement to National Treasury through the use of excess bank reserves. That excess bank reserves is being, the SARP will be paying the repo rate on that. That is at the moment 8.25%. On that, and that translates into the cost on the GFECTRA, but those costs won't be paid directly as part of government's debt service costs. That will be covered actually by the contingency reserve buffer, the 100 billion as per the current proposed arrangement.
National Treasury has appealed to the committee to swiftly process the Gold and Foreign Exchange Contingency Reserve Account Defrayal Amendment Bill.
We have apportioned the resources that will be coming from the account towards reducing government's borrowing requirements for the next financial year. So it's quite important for us to be able to do that in order to provide certainty to our lenders and the market in particular in terms of how the government's borrowing requirement would look like.
The three money bills are expected to be debated and voted on in the National Assembly at the end of next month. Ulelani Philip, SABC News, Parliament.